some fire cloney. The Siggy.
Sounds like a boomer song.
Well, I guess we get started, Rahul. I think we got a lot to cover.
Yo, we do. Is Avi here?
Yeah, we in the building. I see Dougie Fresh. What's going on, Doug? Let's rock and roll, guys. We got some peeps in the house. All right, so welcome back, folks. This is our Twitter Spaces. We got the CEO, Rahul, rocking on the mic. We got Dom on the ones and two. He's got his shirt off for some reason, but maybe he's got some hot fire to speak. We got Riley, and then, of course, we got my co-host, future lover, hopefully. I get canceled for that. But Anthony, Ohio.
What's going on, Avi? How we doing?
We're doing fantastic. Yeah,
you're definitely tired.
Yeah. So a lot of you guys probably know us from, I feel like I'm on a TV show. You may know us from such hits as Pounding the Table, the podcast. But today we are doing the Spaces, right? And so we have a lot to talk about. A lot has happened this week. Me and Tony are going to hop off after this. So if you guys have questions for the podcast, we're going to be doing that later tonight as well. So let's kick things off, though, for Spaces. We kind of do that a little differently, of course, in the podcast. So in terms of the agenda, Tony, why don't you just start kind of with what happened this week? Obviously, there was a lot of acquisitions we'll get into a little bit more here on the podcast, but jump in and kind of share what happened this week. You were mentioning something about Tuesdays being something earlier, so.
Yeah. So, I mean, I think last week when we were on Spaces, I kind of just, I was speaking to the pounding team and I said, I'm commandeering these spaces and I'm making it a space of caution. And I'm really glad that I did, right? Because it was right around that time where you could expect that post OPEX, after the options expiration on Friday, all that really ran the market. And I had a tweet about this. And then, Rahul, if you could find that and post it in there, that'd be great. The tweet splitting up the different moves from Apple, Facebook, Amazon, Google, Microsoft. So basically what happened is, like, from June 22nd to when I posted that tweet a couple days ago, I think it was last Thursday or Friday, basically the majority of the move in the NASDAQ was just those big tech names. So those are the big five FANGs, and that made up, I think, 63% of all the gains in that couple-week period. And so what usually happens is when you just have a few horsemen leading the pack and the rest of the market's actually selling off, right? It looks like it's a strong market, but the market's actually very weak. And the only reason, honestly, it was holding up is because once those big techs start breaking out after that, long time consolidation and everything that has to do with Gamma, like we saw that exact thing last August, September. And then as soon as those things turn around, you were going to get a sell in the S&P and a sell in the NASDAQ, which we saw happen. And what's good about that is that actually triggers a lot of other selling and stuff like the value names. And you saw those get hammered over the last few days too, and started bouncing recently. But when the market did bounce, it was really good to see that the value and the growth names are running together. So as we've been saying, the market's going to continue oscillating between all these headlines. Like we had the Delta variant news. So then I was, very bullish on genomics for the week because that's, very much so connected. Bio and everything runs very well when those headlines are popping. And then also thinking about the work from home names, those names are, acquiring everything. And we'll talk about that, really soon. And on the podcast we're dropping this weekend, Zoom's acquiring, TTD's making new business legs, all these things are happening. So it's good to see the market starting to broaden out and kind of take place in this post-COVID, but still, COVID from time to time world. And, you're seeing a lot of these things lock up, a lot of the different countries and states and stuff lock up again. Or start having those stronger restrictions just because people are worried about these variants. And so I think that you're going to get a lot of different variants. We said this on the pod, go through the alphabet at some point, but it does not mean, that the value names are going to get the same kind of drop unless it spreads like the first time. But it does mean that the work from home names will continue to be there, I think, and seeing what they're doing with, how they're handling this year. They took all that cash, Zoom bought 5N, TTD with these new business legs, Etsy bought Depop. You're just SC made new business legs. You're seeing all these things kind of form out. So it's nice to see the market start moving together. And then as you were saying, Avi, what I said about Tuesdays is that turnaround Tuesday. It's usually the market loves to drop on Mondays, especially post OPEX. And I posted a tweet also about the futures being down is a good thing because if, after the last 2 days we were selling off Thursday and Friday a bit, and if we were slightly up on Sunday, that easily turns around to a minus 80 point day. That takes multiple days to bounce back from. So instead of having that, we had a really bad down Monday, but then from there we saw a really good strength. So that was all OPEX action, options expiration that happened on post Friday, and this is everything that was settling out this week. So markets do look a lot stronger, and I think that there's definitely some gusto to those work from home names moving forward now.
Do you say Giffy or Jiffy? Because you just said gusto. I think it's pronounced gusto.
I don't know, man. I'm not that kind of European. I'm a different European.
No worries. And you just mentioned your tweets, so you don't know this, but on tonight's podcast, I'm going to scroll through your Twitter and call you out on one and have you explain that specific tweet.
I'm looking forward.
Get ready. Also, so Sema4, right? CMLF, you talk about constantly on the podcast. They have some news coming up this week that's very exciting with their DSPAC, with the approved merger here today. So I know you're going to touch on this a little bit. Dom and Rahul also wanted to come in. But Greg had a tweet to us asking as well about the bear thesis. So maybe kind of tie that all together if you want to just address Greg's question and then go on with the chlorophyll, if you will.
Oh, yeah. Greg said that because I posted like my larger cap holdings, and I think it's very different. Like I don't post all my holdings. I move around a lot. I'm a very active trader. But I do keep a big core of positions, and I've been doing that more and more recently too, especially like in the higher market caps, just because of how fast these narratives change. So he was like, the bear thesis is because like AO didn't put CMLF in that post. No, it was because like those are different market caps and they're in a different echelon. Like those are like heads of the table versus these stocks that I'm still obviously like waiting for the thesis to play out, even though it is playing out currently. But I do think that because it's not just sitting at 10 or under NAV, like waiting for it to just like lose a trust floor to dive, I do believe that like it's going to be having a strong reaction post DSPAC. And you've seen that with stocks that are not, with the SPACs that are not just hovering with 10. Like, you know, I know we talk about ShareCare. You like ShareCare, obviously. I've always been a CMLF fan, but yeah, like ShareCare was at 10. So because it was just like holding a 10, I think all the ones that are just holding a 10 into their DSPACs will be selling off like a little lower. And you saw the same with like Kappa, Quantum QSI. Ticker symbols. So, yeah, I think that we'll be able to see that. Sorry? Oh, yeah, never mind.
I think you're echoing a little bit.
Yeah, he just unmuted for a second. But, yeah, I mean, I think the bear thesis, obviously, that people are talking about is all the competitors. But knowing how new and how, like, the cost of sequencing has gone down so much. The cost of testing has gone down so much. There's so many different organizations who are wanting that to come in because of how expensive healthcare costs are getting, especially in this post-COVID world, right? Like healthcare costs are very, very much so in everyone's minds. So I don't think this is at all one of those like winner takes all situations. It's going to be a split pie between like CMLF and NVTA and Natera and all these different companies. So that could be the bear thesis somebody would have. But then I'd also argue and say like Eric Schadt developed 50% of the drugs that was responsible for the development of half the drugs at Merck before he left. So, I mean, if you're going to put your faith in the industry into somebody, like probably the guy who built it and helped build it and has like one of the highest H index scores out there. So his work in the sector is what the other companies use, right? And so I think at this point you're betting on the people who are going to be able to find the most important data engineered insights and understand the network between the data engineered insights and analytics, and then how to get that across to the patient in a very, very meaningful and lasting way. And so knowing that, you know, I definitely back Eric Schadt. I think that their approach versus NVTA is far better. I don't like the company that builds out. I like a company that builds forward. So CMLF's in a much better position because instead of having to dilute 1,100% for a 60% increase from IPO like NVTA, CMLF waited, spun out of, you know, like Mount Sinai, and then from that they have all this expertise in years and years of data and knowledge that looks like, you know, they started in 2017, but they've really been around since I think 2012, 2011. So they have a lot of expertise and a lot of time in the field. And I think that their approach with the SPAC, having that $500 million in cash, I guess the bear thesis is if they make a bad acquisition, but I could not really see them doing that because, I mean, they're very focused on that. And Isaac Rowe is a CFO there, and he's a legend. And Eric Schadt is one of the best in the field. So I'm very long the stock, honestly.
Donnie, what's the real bear indicator?
It's a ticker symbol. I agree with you. I wish they would have chosen a better ticker symbol. It doesn't get me excited. Like Sema4, like, eh. But
we were talking about that. Yeah, if you guys didn't catch that joke, I have this joke that the Avi indicator that essentially it's all based off of the ticker symbol. So I thought it was going to be SEMA forever when they showed me that ticker symbol. I still love the company, but the ticker symbol could be better. And the share care army is here, so please be careful what you say about share care. All right, who wanted to jump in here? I see Dom with his hands up. Dom, jump on in.
Let's go. I'm hyped, guys. It passed. The vote passed today. I was on the call at 10 o'clock. I'm sure all of you guys who have holdings were on it as well. It was a very short call. So let's just kind of take a look at what is transcended in just a little bit of time. We added several new people on the board, including Jason Ryan, who was the CFO for Magenta Therapeutics, very experienced. We also added Andrew Kasarkis, one of the health data experts for their data scientists. Then we go and I retweeted this just now, looks like one of their doctors, William K.O., was named Doctor of the Year for New York. He's actually their Chief Medical Science Officer. You now look at Sema4's Twitter page, and they're starting to post more insights on what they're actually doing and their product line. You're going to see a lot more of them boasting about their ability to do whole exome and whole transcription sequencing. The way they do sequencing is a lot different than a lot of other companies out there. I second Tony's part on they're walking away with this merger with $500 million in cash and zero debt, right? And so to the bear thesis, yeah, if they pick a bad acquisition, that could slow them down. But you look at who's on their board of directors, the CEO of Invitae, you look at the CEO of Twist, and this is not a drug discovery company or a drug company. This is a drug discovery company, right? So this is a safer play. This is a data play. This is a leader and CEO who's focused on whole patient care. That is very important because he's focused on making sure whatever they go after, that they can actually deliver results. And he's talked about that in interviews throughout the years. So when you look at the leadership, you look at the balance sheet, you look at the technology and their Centrellis platform, and they're starting to advertise and say, look, we got the best shit, man. Our AI is better than everybody else, and you're going to see it. This is something that's not why it's not on the top of Tony's bonsai. And Tony, correct me if I'm wrong, but why it's not at the base is because it also has to execute, right? You look at all the names that he's listed on the bottom of his bonsai, they're all like 20, 30, 40, $100 billion companies that have proven themselves in and out in the marketplace. So they still have to execute.
100%, Dom. And that's definitely why I didn't put it in there, because it's still recently, it hasn't even gone fully public yet, right? So I'm going to want to see like a lot more of even though they had the great first quarter report, which they hit the estimates, which if you multiply by 4 is the entire year. So you're basically assuming that within the next 3 quarters, they don't buy anyone, which adds to their revenue, which is 20% of their like market cap from 10 is the cash that they have for acquisitions and building out. But also like just the fact that they've already hit those numbers and they started already growing some more of those revenue legs. So they're pushing to do that. They're hiring oncology engineers and all these different things for those different business legs that they've been saying that they're going to be moving into. And I think one of those was up 172% year over year. Even though it's small numbers, they are moving really quickly with that pace. So looking forward to that. And if they post another earnings report, I really would not be surprised to see them already like start really beating the entire year's guidance, just because if you already do 65 million in quarter one and your entire year is 260 million, like that's 1/4. So you have to assume that there's no growth in the next 3 quarters, which I find extremely unlikely considering they added, they have access to 20 million patients now. When they first came out, they had 10 million. And even though they're not using the extra 10 million all yet, they're going to be using between 1.5 and 3 million already. And that came out in an interview recently with like Avera Health and Advent Health, North Shore, expansion with Mount Sinai partnership. So they're all over the board with that. And that's exactly what you want to see. And they don't need to go huge. They're trying to perfect the system to make it so that those secondary data insights can just be like a plug and play to any healthcare system.
Yeah, I think that's the big thing too, as you see some of these companies de-SPAC, right? Like what happens on that first earnings call what's the direction of the company going to be? So, I mean, we saw that with Skills. You know, it was really interesting to hear kind of what the future unholds, and you know, people I guess went different directions. But ShareCare too. ShareCare, keep going back to that one for myself. This is an Avi pound. Tony always has to delineate there, but you'll see too, I guess, coming up here what the actual earnings are. What are they, you know, sprouting off here coming up in the future? Which brings us perfectly actually into CCIV, which is very near and dear to our hearts, and then also was the worst roller coaster down I've ever experienced as well. So CCIV will be turning into Lucid, which is very exciting, which the rumors, of course, had that huge ride up. And then, of course, once the financial terms came out through Bloomberg, it came tumbling down. So, Rahul, I know you wanted to touch on this a bit here with CCIV turning into Lucid. So you got the floor, man.
Yes, sir. Thank you, Avi. I did want to touch on it a little bit. I mean, I was literally thinking about it today, just like how crazy those days in January were. People were literally tracking down Michael Klein's flights to like around the world every single time Rollison was on TV or someone from the Saudi Arabia fund. People were literally criticizing or scrutinizing every single word they said, trying to get a hint. It was a month wait, and then we saw the roller coaster, like Avi said, $10 to $65. I got in early, didn't sell any at the top, which was a mistake, but I'm happy to be holding this company. I mean, I wrote a thread, really brief. I mean, and I started writing these things down, and I realized how much this company truly has to offer, and it's been broken down in the pod multiple times. I mean, Tony's dug super deep, so none of this is super new information, but like, if you just go down some of the things that like, a lot of people just say valuation. Okay, they never manufacture anything. All right, yada, yada, yada. But that's what a growth company does. It's supposed to be what the potential of the company is and the business. And that's what you're kind of investing in, right? And if anyone looks at like what Rollison said about the actual valuation of the company, we got a better deal than like even the pipe investors, right? I mean, I'm in sub 15. I've been holding from day one before the DA was announced. But even if you got in higher than that and sub 20, like, you got a good price. And if you're willing to wait and, actually be invested for the long haul and see how the company executes, I think this is super exciting company, right? Like, I've got in my thread here about the range and battery, which, you've got the first to 500 theme they've got going where they trolled Tesla with Saturday Night Live on that commercial. You've got like the efficacy of the data. I mean, of the battery, right? So you have them being able to do 4.5 miles per kilowatt, which is insane, right? And the battery is also smaller and more compact and weighs less on the car, which is huge. It's super important. A lot of the rumors you're seeing about Proterra and the battery pack being too heavy for the bus, like that's why it's important for the battery weight to be correct or be at the optimum levels, right? The ability to scale it, right? You see, like Tony mentioned, Etsy bought Depop. You see Zoom buying a Five9 the other yesterday or today. I think Microsoft made a big acquisition. You see all these big names and they're acquiring companies. Even the SPACs are starting to acquire. We've talked about Astra. They acquired Apollo Fusion last month. These guys have over $4 billion in cash on their balance sheet. Tony said this on the pod multiple times. Tesla was nowhere near in this position when they started. They had a lot more hurdles to deal with. The blueprint is set. Rollison worked at Tesla. I don't care what Elon Musk says. He did work there. He was part of the Model S team. He can lie as much as he wants. But he was there, right? And he has a lot of cash in hand, a lot of good investors. And then going off of that, the design, right? I've talked to a few people. A buddy of mine went to Miami recently. I've talked to a few that have gone to the meatpacking district, Lucid Studios, and they said, like, the hype is real. Like, there's never seen a car like this from the inside, right? So, what they've designed and the companies they partnered with for the certain parts and features of the interior of Lucid is truly like, mind-blowing, and people have seen it and experienced it already. So I can't wait for it to hit the road. It's founder-led. Their exec team is badass, if you ask me. And in my thread, I also talked about the TAM, right? Like, if you read any consulting company or if you look at ARK's projections, which is a bit bizarre, that's why I'm going to bring them up, because they're predicting 40 billion in EV sales by 2025 or something, where other companies are predicting that more by 2030. But what does that mean? That means that we're going to grow. The TAM is going to continue to grow, which leads me to my next point, which is like the energy storage system, which they just talked about again in their investor deck, which tells me that they've already been working on it. They know how important it is to create new legs. You want these companies to become multi-headed monsters. And today's the merger of all, right? So I was just reminiscent on those January days when everyone on Twitter was talking about this name, and you've been seeing a lot of hatred towards it recently. But look, like, if you're willing to invest for the long haul and if they execute, right, like, they have to prove it, like Dom said about CMLF too. And if they do, I don't see why this company, can't be, a great company down the line and continue to grow, right? They have all the tools to kind of burst this engine open. I don't know if anyone else wants to jump in, but I just wanted to hit on that.
Yeah, I'll just jump in real quick. Yeah, I do. So, and I have shares. So I'm a shareholder. Like, I want this to succeed. I want this to take off. There's a lot of investors that will say sometimes it's better to be second and not first mover when you can see all the mistakes made or just build on what's already been laid down. So they have to get data quick, right? We all know that with autonomous driving, the more data you have, the better your car is going to perform, the better accuracy, less accidents. AI and data go hand in hand. So how do they combat that? How do they differentiate themselves from Tesla? Because you have this very energetic, compelling leader that has a huge following. They have to execute to their claims on the mileage. They have to execute to the battery storage. They have to find new revenue legs that Tesla's either not in or that they can compete and have better technology, because the better technology will win ultimately. It's not a winner-take-all market, but they have to differentiate and find those legs. And they have a chance to go global, right? Maybe they have a chance to go in where Tesla's not globally because they have all that Saudi money coming in backing them.
Like China? Because we know NIO's already ruling that, so just gotta throw that one out there. That's my entrance.
Yeah.
Hey, I like it.
I knew you were going with it.
Let me just quickly rebuttal Dom for a second, then I'll hand it to you right for Riley. I know you want to talk about NIO real quick. But Dom, you're right. There's a lot of things to prove. But the biggest thing is, like, first things first, they're differentiating themselves by starting with, like, the global luxury market, right? Like, Tesla can say whatever they want. They're not like they're not what Lucid is trying to be, right? And like you said, there's going to be multiple winners. I just talked about TAM. It's growing at a rapid rate. There's not going to be one, like, EVs are going to be the future. You have buses, you got vans, you got all these different moving parts in transportation that are trying to become electric. Third, as I mentioned, Rawlinson was already there, and that's been refuted by Musk, and he's wrong, right? Like, and I love Tesla, right? Like, there's never another Tesla, so I'm not a Tesla hater by any means. If anyone's thinking that, I love Tesla, there never will be another Tesla, and no one's going to beat Tesla. We already know that, right? And the question is not about beating Tesla. The question is about who can be that second, third, fourth fiddle, right? Because there is a Square and PayPal. There is, like, multiple genomics companies. There are multiple banking companies that are doing well. There's multiple players in every sector, right? Look at the cloud, right? Like, people have been saying this about almost every single company. Like, what's Amazon going to do next? What's this company going to do next? Like, they figure it out if they have the right people in place. And again, you're right. Like, they have to prove it, and that's the whole point. And that's the benefit of being in a SPAC at an early price, that we had this fortunate opportunity to get in at that level where, you have the opportunity to wait rather than having to pay at the IPO price. Look, just wait till Rivian comes IPO at $70 billion and tell me CCIV is not worth it then. But Riley, go ahead on NIO.
Yeah, I mean, Raul, I don't. You guys all love Lucid. I don't hate Lucid, but I think that NIO's the clear-cut number 2 in the space, and I don't see that going away, at least for a while, if not ever. And I think that if anyone will challenge Tesla, it is probably going to be NIO. I think because NIO is trying to be different than Tesla, and I think Lucid wants to be Tesla, and I don't think that that's a bad thing, but I think NIO is trying to do the different things that Tesla won't do, like the battery swaps. They're trying to, do more things, like the lifestyle brand that they have. They're trying to build the NIO houses, that if they can make an American expansion, I could see them actually getting up to probably the $300-400 billion market cap.
They're not coming into America. They ain't coming in America. I'll tell you that now.
Here's the thing. If they don't get to come to America, what's going to stop the Chinese government from kicking out anyone else? Hence, Tesla, who else? Lucid, all these other brands that you think that are going to be able to go into China. If you want to say no to NIO going into the US, then that's fine. They'll just kick out all the American brands. That's fine. And I would gladly take the number 1 market share in China over having maybe a decent expansion in America. So it could go both ways. It really can.
Tom, why do you say they're not coming to America?
with all the drama and everything that's going on with the hacking and everything else, are you not watching the news of what we're doing with Chinese companies right now? Who knows if they'll even be on our stock exchange soon?
I think that's pretty overblown, but they're listed on other.
It's not overblown as far as what's happening. I work in the cybersecurity space, bro. I tell you, it's not overblown.
We were in a trade war 2 years ago, 3 years ago, and now we went with
it's
a year.
Different than a cybersecurity warfare when you're attacking our country.
I think
get the hell out of here.
It's pointed towards Russia more than China for the hacking, but
no, it's not.
Regardless, they're still going to be able to expand in Europe. They're going to expand everywhere else except for the U.S., and that's fine. If they don't make it to the U.S., that's fine. That's not going to be the worst case scenario.
No, I'm not saying they're not a good company. Because the biggest thing is it's a big TAM. That's my favorite part. It's a massive TAM.
All these companies can do great, but I think that
all right, children.
If the ET7 is what they claim it's going to be, it will be the best car on the road. It will have the biggest battery. It will be able to go farther than everything.
Yeah, I want to hear.
And they will have battery as a service.
All right, guys. Yeah.
Go ahead.
I love the friendly back and forth. And then
me and Dom love each other.
I know. We all love.
It's all love.
I just feel like, I wish you could see some comments. If anyone's from Twitter Spaces here, throw a comment thread in here because I would love to see if people like the banter or not. Because I thought it was funny at first, and then I was like, it's kind of funny now. So it is good though. I like the back and forth, and I think it's always healthy to have a bear and bull case. Like typically in my head, I'll think of like where the what's the worst thing that could happen, what's the best thing to happen, and that's a really smart and healthy way I think to before you buy a stock. So that is dope. Let's go to SE though. So
I gotta hop in here, Avi, really quick before we move on here. There was a lot said about the EV space. First of all, there is never going to be a company in the automobile space ever that even comes within 10 miles of Tesla. It's literally Tesla is going to be that, like, you think FANG's
literally said that,
Yeah, I fully agree, Rahul. I mean, like, I've said it too, like, Tesla is the next Tesla.
I'm going to say this real quick just to cut off Tony, but happily cut him off. I know a bunch of people here say there's no next Tesla as the next Tesla or whatever, and Tony was the first one to say that. I got to say that. I'm fit into it. He was the first one.
Dude, I appreciate that, Rahul, because honestly, I've been in Tesla since it was the market cap Lucid is now, right? So that's the reason I'm bullish on Lucid. I do own Tesla as well because my man Elon is $1 trillion man. That's first of all. But second, like Lucid at the current valuation, and if it even, does the next 2 or 3 years what it's projecting to do, and I obviously think that the smart move would be for them to sandbag it, right? Like, yes, they're peddling deliveries. There's been commotion in the auto space because of chips and this, that, and whatever. But I do think that they're going to be pushing out cars. They have to push out cars before the end of this year. They're for lack of better words, fucked if they don't. So I definitely think that they will. Rawlinson knows that. It's like the most critical part of all this. But I'm not looking for this to be the next Tesla. Nobody's coming close to Musk. Like, he's literally so much smarter than all these other guys. It's not even a comparison. And that's fine. Tesla's got 10 years ahead. And so, I did say they were in, like, different places. Like, 10 years ago is very different than today, right? Like, the technology is much more accessible to everyone. And so that's why we talk about the second mover advantage. And they're also going after a very different market. Like, Tesla has a knack for dropping, the best tech, this and that. But the quality of their cars is not perfect. Like, I have a Tesla Model 3 from 3 years ago, and my wood vinyl that's on my dash is peeling off, right? So that's definitely, like, that's the difference right there. Like, you're buying Lucid, the point is, like, perfect luxury, and that's going to be very, very big in some place like Saudi Arabia, which they have to build a factory there because the Saudi Public Investment Fund owns like 62% of Lucid. So there's a very, very big market there for them to do that. And then if you also look to where, like, the customizations that they have, like for China, the backseat lounge, like chauffeur driver style that they have for like the Lucid, I think that's coming up next year. But like that's going to be huge as well because a lot of those people in those places, those wealthy businessmen and women, are the ones who are driving chauffeur style. So you'll be seeing stuff like that, and it's very niche in that way, in my opinion. Right? Like there's a ton of car companies now, even when it was electric. There will be a ton of car companies, or even when it was ICE. And when it is electric fully, there will be a ton of electric car companies still. And I just think Lucid has a really good niche to capitalize on, going for that second mover Tesla-like car with a focus on quality.
Yo, I absolutely agree with you, Tony. And you guys have ripped down the pod. We don't even need to jump into it. This was great, though. It's good for us to all like discuss like this. And it's good for you guys to see us. Like we all
It's
have
like therapy
different
right there.
opinions sometimes, right? So that's the whole point of this. Like, there's two sides to the market, as long as you're on the right side, except share care.
Yeah, right. And
How do you
Raul,
pick
I
people
think,
off, Spaces?
yeah. The other thing is opportunity costs, right? That's why we're talking about this. There's not going to be another Tesla. He'll figure new ways out to integrate with Starlink and the cars and SpaceX and everything else. But you got to look at opportunity costs, right? So if you're looking to grow faster on your account, then you do have to take into consideration opportunity costs.
Yeah, no, I agree. And I know we have a few other things to jump ahead to, so I'll let Avi keep moving ahead. But I do want to say Riley will be talking about Neo next week. This is not over.
I need at least a 5 minutes.
I got you.
If not 10 minutes.
I got you, dude.
We got to create a separate handle for FinTwit battles. Which guys, whoever's going to GoDaddy
You
right
just
now.
gave that idea out.
No, I just said if anyone's going to GoDaddy, I own every single domain possible in that field. So I'll just save you guys time. So opportunity cost of capital, great transition. I'm only on the show because I called one stock 20 years ago called Jumia because of hearing about the opportunity cost of capital. And SE is that was the kind of spade is a spade that you were comparing this to. So SE went absolutely rippy mode past few days. And you were telling me earlier, Tony, that you think it's not even stopping yet. So talk why. I know we touched on it last podcast and we talked about some of the new legs. So is that the reason why, or why do you think now is the reaction?
So I think it's got a lot to do with conditions, right? So let's say and we said this on the pod 100 times, when the conditions change, the stocks that are leading and the ones that are in focus will change. And conditions just changed a lot faster and more abruptly than anyone expected. And so that is, why those companies have been more funds have been allocated to those more proven, safer names, because people know it's more risk off, right? So if you think about what ARK does, ARK buys FANG, not because they want to own FANG, but because that's their cash equivalent, because they don't own cash. So they buy stuff boring stuff like Apple and whatever. And yes, I said boring. And they buy those and they hold them until they see opportunities in other names at better opportunity cost, right? So SE, in my opinion, is one of those FANG-like stocks now. And the markets have been allocating more and more money to that. And you've seen the same with Shopify and Square. Those names have pulled back the least during the first horrible growth crash, right? If you go back, and this is actually something that I do all the time, and I recommend anyone new or old trader to do this, to go and look at when in February to the May bottom, that strong decline, go and look back and see which stocks held up the best. Because if those conditions happen again, right, if we get those inflationary fears, right, lumber's at 500, things are obviously chilled, and the Delta variant bought time. But once again, those things can flip so fast because the 10-year literally doubled within a few weeks, so it could do it again. And so that is why I've moved a lot into SC and Square, and that's why those things are going up, because you saw big tech do very, very well in the inflationary environment because it doesn't matter. They have a ton of cash. They're able to, they don't have to worry about whether or not they're going to get their debt payments paid back or not. They have as much flexibility and mobility as they want. And in fact, it makes it better so they can, if they want to acquire a company that's a growth company, it's going to be a cheaper multiple. So there's a lot of benefits for those companies. And SE, Square, Shopify, even Twilio, those companies, even though Twilio is not even profitable, but they're all moving towards profitability. They all look like 10 years ago FANG. Right, I remember trading Amazon when it was 300, and I don't see why SE can't be a $4,000 stock. Yes, I said $4,000 stock, but in that same time period, right, from 2013 to 2021, that's 8 years. You're going to see a lot of change in those companies in the next 8 years, right? And SE's projections, I was reading this report. I don't even know if it's fully accurate, but I do know that the projections that they're going to make about 2.3 or $3 billion in profit in 2023, I believe, and I think I saw an estimate that said 2025 they're going to do $50 billion in rev. So you're moving into that mega cap category quickly, and because of this more risk off, even though conditions have settled out, the 10 years came back down, the markets are still in a perpetual more risk off than it was November, December. So you are getting allocations to those names, and they based for a long time. Amazon based at 300 for a long time. Amazon based at 600-700 for a long time. And then it just moves vertically up 30-40%. Spaces Forever does the same thing, because as different environments change, like as the market changes and the environment it's in, you get more and more risk on or more and more risk off, and both of those are advantageous to those companies because they're in that perfect sweet spot where they'll benefit from the growth run and they'll benefit from the risk off, because SC only went down like 20% during the worst of the market crash recently.
Tony, can I just jump in real quick? But sorry, Avi, just 1 second. I wanted to just jump in on SC real quick.
That's all right. We'll fire you after the show. It's fine.
Yeah, exactly. But Tony, you're right, by the way, on the 20%. We talked about it last Spaces, the Anchor VWAP, so that was sick. By the way, anyone on this listening to this, I literally bought SC when Tony went deep dive in October, I believe it was. It was one of the best episodes ever. I think it was episode, I don't know, either 13 or 16 or in between there. So
who called the bottom there, Rahul?
Huh?
Who called the bottom on SC?
Oh, that was Avi. I'll give him credit. I don't know. He can't find the tweet, but this guy.
I had no idea why. It was just
Avi tweeted, I will be proof. He tweeted 180, looks good. I think this is the bottom here. And this
was not a skills bottom where I
yeah.
tweeted.
No, he was spot on. Actually, that's my average, by the way, Avi. So you were spot on. But what I did want to say, Tony, was two questions. Didn't Forrest Lee talk about how he's looking to make this a $1 trillion company? I think it was one of his conference calls, right?
Here's a little sneak peek. When we interviewed Jim McElvey from Square, the co-founder of Square, who's going to be on next week's episode, which we're going to be dropping.
I was just going to ask you when you want.
Yeah, he said the same thing. He says, I don't see why Square can't go 10x. And that is the most, right? Like,
same thing. And I asked this yesterday. Yeah. I put a poll out.
I also said they're all
$1 trillion company.
Maybe they listen to the podcast. I don't know.
I put a poll yesterday. Square, Shopify, and SC. So it was neck and neck. Shopify won by 1%.
Yeah, I mean, I think that hearing that from the CEO is like, I mean, that's conviction, right? Like, who's going to have more conviction than the guy who's like one of the biggest ownerships of his company? Like, he's got a huge stake.
He's on the board.
Yeah, he owns like, what, 22% of his company or something like that?
You guys have to listen to this one because there were so many times we paused and we're like, do you want us to erase that? And he's like, no, it's cool. Like, go for it. It's a great one. I'm probably most excited for that one of any podcast we've ever done. So, and then SC, I just gotta say this before we move on here. Tony, you told me $1,000 was your price target, and then you're like, no, it's actually 5,000. So, is that real?
Well, I was just thinking, like, if it does the Amazon strategy, this is not a short-term thing at all. I'm just saying, like, what's the potential for what it's doing? Like, you just think about like Southeast Asia, and then you look at Latin America, and you see how quickly they're just like seeping into every store, every person's phones, and you think those things are 5% penetrated. And I know Mealy is a super strong, like they are the owners of Latin America, but at 5% of the pie being taken, SC can take even 20%, and they're fine, right? Like they have like nothing. If you like kind of track that over what Amazon did in the US, and I just think you're going to be able to see things that you don't expect to happen from SC. And like, obviously that's in a long, long time. But the reason also is it's getting that kind of growth that you get from a company that would be like, you're like in China, like I was talking, like, why is PTT not super loved? And it's because it's a China name. But SC benefits from being in all those places while being a Singapore name. So that's like a huge benefit. I think that like that's as good as in the US in my mind. Like Singapore is very, very strict in finance and banking laws and everything. And so it's not going to get a bad multiple. And you've already seen that now, right? The strength it is and the constant fund buying and institutional ownership and the float being just like so locked up by big, big players. I just think that all those things combined and then adding 3 new business legs, which if they added 3 within one earnings report, like you think they're not going to have like 20 services? Like Amazon bought Whole Foods. Do you think they get into groceries? No. SC is going to do all that stuff and then more because they're growing so fast. They're just following the Amazon playbook. And I think Forrest Lee has every possibility to get to $1 trillion in the next 5 or 10 years, which would put it like 3,000 and then, you know, like give or take a couple thousand, right? Like I think that like this just depends on how long you see it going out, but I think it'll be one of those big FANG names in 5 or 10 years. Yeah.
Real quick, and Riley has a question after me, and then we'll move on to if we still have time here. Actually, we can take a look, but we could also touch on the NVDA split, and then we can just talk about the week ahead of kind of what to look forward to. So talking about SC with China and being based in Singapore, obviously Tencent has a massive, like a pretty big stake. So how does that affect? Is it like more beneficial because they have ties in the government with China, or do you think that could be hurt, right? If the U.S. says, hey, for some reason, I don't think this will happen, of course, but like if they do start delisting Chinese companies, like how does that impact SE? If you do know, I don't know if I'm putting you on the spot.
First of all, I don't think that's going to happen, and second, like it's not. And that's not at all in the forefront of my mind because of like that risk was probably there when they were operating there earlier, but now they're expanding everywhere. So I don't see that being a specific risk. Plus, how do you like stop a video game all over the world? That's the number one grossing video game. And like you talk about the relationship with Tencent. Well, the best part about, first of all, like Tencent has this venture cap arm and they buy things like SE, and now they own like 25% or 22% of SE. And SE is doing the same thing, right? So, but they're doing it out of Singapore, so they'll get a higher multiple. Tencent's a super cheap trading company, but they're also one of the biggest gaming beasts in the world. The fact that Tencent and SE have such close relationships, like Garena is the AWS to SE's or to Amazon's, like to SE's Garena is Amazon's AWS, is what I'm trying to say. So that's the cash cow that allows them to expand and grow in all these different legs. So having a relationship with one of the biggest, if not the biggest, game developer in the world, which is Tencent, is just nothing but great for SE and their most important leg, which really is the dependent that will determine how well the other legs do, because you can't just bleed money from everything. But Garena is that cash cow that's going to allow them to do that, and they're already reiterating like Free Fire into Free Fire Pets Rumble and a bunch of other things that are going to be like off the IP, but not a brand new IP. Just so they're iterating on that IP that's already there. Like there's like 25 Call of Duties. Like that's kind of what's going to go on. And they'll continue to work with Tencent. And Garena is great because they retain a lot of the billings from whatever companies they work with. So it's like sometimes between 65 and 80% of the gross billings they retain from distributing the games. Because no one wants to fight against SC, so you'd rather work with them. But Tencent and SC have mutually aligned interests. So,
just to add on to Tony, kind of lined me up for the next question here. I just want to talk about Grab a little bit. I know, Raul, you love Grab, and I know that Gojek and Tokopedia are merging, and so they're kind of trying to form a competitor to C and Grab. What do you think would be the possibility of a merger between Grab and C?
They're merging because they can't compete with Grab or C. That's why they're merging. They haven't even decided how they're going to go public yet. So I'm not worried about Goto. But the question about C and Grab, which I think is a much closer competition, even though Tony may disagree somewhat, but there is a number two, right? That's for sure. It's like he said, 5% penetrated. Like that's the whole point. This region doesn't have a Square and PayPal. That's a good question. I mean, like valuation wise, they're valued at like 40 billion. So I don't know if mathematically
it would be a combined like 180, probably 200 billion.
I don't see it happening, especially with Brad Gershner getting involved. He's invested in both too. I think I don't see him why he would go all in with a SPAC to eventually get it. So I mean, but then again, you'll get the premium, so you win with the SPAC. So I don't know, Tony, is it mathematically possible? These are like those dream mergers we hear at C-Pins.
I just think this would be like the merger that would make sense.
Yeah, 100%.
Yeah, I agree. And anything's possible. It's just going to take a lot of tape to get through, but it's probably their best bet. And once again, though, like, do I have any questions about someone competing with SE? No. Like, the numbers that they put against Melee in Latin America are staggering. So, I'm not worried about
what should happen, Tony. SE, instead of worrying about Grab, let Grab do their thing and buy Melee out.
That's the better one. That's a better solution. They really should. And I think that honestly, if they act, because here's the thing, with all this like geopolitical risk around the world, you've got just the fact that there's risks of the CCP in China highlights the risks of Argentina. You know what I'm saying? Like Argentinian defaults cause similar reactions to the CCP being, I don't know if I can say it, but I'm just going to keep going. But yeah, exactly. Like that stuff can happen. And so that fear is why Melee trades at the lower multiple as well. But I think that if SE can keep grinding, it'll just get more and more market. Like eventually, if SE is like 300-400 billion and Mealy's still like 60-70 billion, I couldn't see why they wouldn't do a partnership or something like that. That could be really cool. Then they would literally own the content. It'd be game over. I mean, they have 658 million people that they that's all theirs. And I mean, once again, like I think that they'll still crush it on their own, but because they're going, and I think Mealy apparently was going in the US as well. With, I think Dom was talking to me about this, I think with Big C, they're working with them to go cross border into the U.S. Dom, correct me if I'm wrong.
That's interesting.
No, you're right, and I don't know. We'll see what happens. We'll see. One, we know Big C's not as big as Shopify, but they are a big presence, and if it gets them in the U.S., that's a jump start. But are they doing that because they're getting their lunch eaten in their own country, where SE is really ramping up with app downloads, Free Fire, and everything else? And do we see? I mean, it's not too far fetched to think about Forrest Lee and Toby partnering up and say, "Hey, let's Shopify and let's Shopify and Seed just partner up and we'll go in the U.S." So it'll be interesting to see how this plays out. We know that e-commerce is not shrinking; it's only going to expand. But what we like from these companies are they keep adding legs of revenue. Bezos set the model on optionality and not needing to turn a profit right away, because if they wanted to, they could. But they're focused on reinvesting in the business, and we all investors should want that out of their picks.
No, 100%. I want Riley to jump in a little bit, and also Riley.
I just kind of had a little thought about Ozon. You guys think that could be an acquisition target? I feel like that one's kind of no one really talks about Ozon anymore.
That's pretty cheap too. I mean, like, I mean, not like revenue value wise, but just like it's like what $9-10 billion.
It would be worth it to get into that big market and try and use a lot of cash to expand faster than what Ozon can by themselves.
That would be cool. I don't know if Max is listening, but I'm sure he would love that. So, Max the comrade. Yeah, I mean, I can totally see that happening. Honestly, like, I think that they're gonna always try to go in there first by themselves and see how they fare, but I think that as they get larger and larger, I don't think they want to mess up what they've got going right now, because I think they have a very good strategy, right? Like, they're like, let's crush with Garena, blow that up, iterate those games, push it out into the new legs that we're developing so we can start to grow those organically. And then in a year or two, when they start churning that profit so it doesn't hit their balance sheet and then they get a lower multiple, they'll start doing stuff like that. But I think you'll see that in time. But right now, they're just going to go for the Val rip. Like, I think that they're going to try to be $300, $400, $500 billion company. And then you're going to start seeing them because that's when like Amazon started doing crazy stuff, right? Like $200, $300, $400 billion. And you'll probably start seeing it happen around then, just because they're going to be closer to constantly cash positive, and like their other business legs will turn cash flow positive too in the next year or two. And so then that'll be like prime striking time, because you can just prolong. Like, you can say I'm already profitable, and like these expenses are like these one-time acquisitions, these stock transfers, compensations, whatever they're going to end up doing. And then, like in 2025, they're like, oh yeah, screw it, $5 bill rev profit or $5 bill profit. And then it's another story, right?
Yeah, 100%. We can talk about SC, Shopify, all these names for months. That's why Tony and these guys have talked about it multiple times on the pod, because these are the best names that you want to own for the longest tenure. Like Tony put that tweet out today about the percent allocation on these large mega caps. But try to keep things moving a little bit. Riley, I want to hand you the floor. 30 seconds. Don't get yourself fired.
Wow. I want to go back to Neo, but I feel like I'll save that for next week. But I mean, I think everyone's kind of focused on the e-commerce side, and I think the place that a lot of people should be looking at, and I think some people probably noticed it, but Fiverr was having a hell of a week this week. I mean, I think it went from $199 on Monday to like what, $230, $231 maybe today. And I think the service sector industry is just going to keep exploding. I think post-COVID, service is just, it's going to continue to grow. I mean, you have freelancing that is going to explode regardless of whether there's going to be COVID. It drew people into freelancing, and now they're going to stick with it, because why would you want to go back to that office when you can make a lot more money doing it on your own, being in your own home, whatever it is? I think that Fiverr is the one that people need to look back into. And I think that a lot of people were just holding off on it because it has a crazy multiple, but it's a disruptor. Disruptive companies are going to get that high multiple, and you're going to have to pay for it. Or if you don't want to pay for it now, then you're going to end up paying for it even higher later. So
I like
that was my little 30-second.
Are you for chart thread tonight?
Probably later on tonight. Okay. Yeah.
So watch Riley's handle for that.
Yeah, Riley's getting real good at that as well. And speaking of disruptive companies, I know we're not going to go too far into this because we're actually launching Dom's new deep dives. If you guys haven't seen the trailer, it's hilarious. The guy is wearing literally goggles as he deep dives into NVIDIA. So we'll tease it out a bit here, but Dom, again, I guess reintroduce yourself to everyone. I know we got a little aggressive earlier, but your deep dive is as aggressive, and so I'm super excited for you to launch this. But talk to us a little bit about the split and everything that's happening here.
Yeah, well, first off, you can't take yourself too seriously. So I do know a lot about NVIDIA, so don't turn me off when you see me in the goggles. But, with the split, I think like any split, it's great, right? People don't understand what a split really is. With the split, they think that the price goes down, and it's not. It's just like cutting a pizza up into more pieces within that same pie. And it's going to give, though, the opportunity for people who don't have fractional shares in their brokerage account. It also is going to allow them to accumulate 100 shares for if they want to do options. So I think we'll see things continue to go up. We may see a base like Tesla did and some of the others after a couple weeks after the split. But I don't want to give too much away on the videos. But what we're going to do is we're going to do a deep dive in a series, right? I want to walk you through on why this is one of the few companies in the world that I believe, in my opinion, that the market cap rule of, okay, it's getting so big, how could it possibly keep growing as fast as as these small caps, that it could defy that. Because what they're able to do in creating compute as a platform for software, this is not a hardware company. This is a hybrid company. It's compute as a platform. I'm just going to give you the new products that they announced last year, and they're not making much revenue off these yet. And we're going to walk you through, in layman's terms, what is the value prop? Why do I care about this? And how would it impact me as a consumer, or how would it impact my business? So the new technologies right off the bat is the Omniverse and Isaac simulation with digital twins. So just like Palantir has digital twins, NVIDIA has digital twins, and they are entering the metaverse both for enterprise and for consumer. The next piece is they're doing drug discovery. So they are partnering with Schrodinger, one of the best drug discovery companies in the world, to help do compute faster with their supercomputers to find resolution for drugs. They also have solved for their Bluefield chip, which is a data center chip that has networking, zero trust security built onto the hardware, and fixes the throughput challenge that servers have with memory communicating with the CPU. So that allows their mobile gaming, which they have 10 million people on, to be a lot better, to be a great consumer experience. They also are going on to quantum compute. So quantum compute is going to be huge. Do you know of any pure play that's rocking quantum compute? If I'm putting my money on anybody, I'm putting it on NVIDIA and Jensen Huang. They're also doing natural language processing with speech to text with a 98% accuracy, including multi-language conversion. These are just the highlights. These are just the technology. This is not.
No, this is fire.
Genomics.
And honestly, I'm a very visual learner, as you guys can probably tell. It is. I watched the video. It's much easier to understand, and it's really cool to actually watch the background. So it's hilarious. If for anything else, just watch the intro, but definitely watch actually everything. It's phenomenal, Dom. So super excited to launch that. Is Nomics Nat on? All right, guys, we have Nat Haruni. So he's one of my favorite follows on Twitter, really, about all of genomics. And so we're in the process of trying to bring him on Pounding the Table Network. So don't follow him quite yet. We're about to sign him, so don't get his head too big where he renegotiates. But anyways, Nat, welcome to the table. Let's talk a little genomics. Obviously, the Delta variant is running rampant, and so we've seen kind of an uplift here. So would love to hear a little bit more from your side.
What's up, guys? Thanks for having me. Who else was having a lot of fun today with the markets, dude? Did you see that little genomics rip?
Yo, Beam Brother.
Beam Brothers. Yeah, so there's a lot of news revolving around the Delta variant and whether the worry is warranted or not. Genomics is absolutely ripping. I think there's a few things that I want to touch on. I think I'd like to talk with the charts guys, Tony and Riley, about it. We see Moderna, by the way, absolutely ripping. I just want to cover why Moderna is doing so well. I don't think the Delta variant is going to be as big of a deal as people think. I know that the markets tend to follow the news, and like the NASDAQ is absolutely ripping, like as it was when we had that first wave of coronavirus. but Moderna is in an excellent position to roll out new vaccines in case we do need new vaccines. As far as I'm concerned right now, I think the spike protein vaccine that they created should be good enough. But God forbid something really does happen and the new variant starts infecting more people. I don't think it's deadlier. I don't think that's the situation right now. I think the situation right now is that it's just infecting more people easier, and that's typically what happens with viruses. So when viruses can infect people, like because people are wearing masks or people are vaccinated, it's very normal for the virus to mutate and basically ask itself like, hey, why am I not infecting people the way I used to be? So the virus mutates, which is very natural, and it has mutated to a point where it's infecting people with more ease. But the vaccines should protect us. And in case it does mutate to the point where the spike protein changes or something like that changes, Moderna doesn't have to go through a phase 1, phase 2, phase 3 trial again. So they're in really good position to roll out vaccines within probably a month or a few weeks. And I think the market knows that. The market is really showing that with their price. And I've been talking about it a lot on Twitter. So I don't know if this price really is warranted, but they're in a really good position to acquire a company right now. So I think M&A should be a really important conversation that people talk about. And in my opinion, I think Intellia is a really, really good M&A target for them.
Yeah, Nat, I fully agree with you there. Also, what's really cool is that like getting added to the S&P, that's just institutional buying, just bringing more attention to the sector in general. I could totally see somebody wanting to snag Intellia, but I guarantee you, like, I think we both talked about this too, like it's going to cost a pretty penny of premium.
Right.
One thing I really want to touch on, because you and I were going back and forth and wondering why CRISPR was sucking for like longer than the rest of the genomics were this week. So if you like overlay all the charts and you see, most of them run very, very syncopated with ARC. And so like ARC's a very good bellwether to see when genomics are going to run, because it's just about the flow of whether it's getting into growth or it's getting into value, because this market's very rotational. But you can see like ARC was holding well, and then Beam started bottoming out. In fact, Beam had like a green day or two before the rest of the nomics started ripping. And then, Intellia is the new leader by a mile, right? And people obviously pay higher for in vivo than ex vivo now, I would assume. Correct me if I'm wrong, Nomics Master. But like, I really do think that Intellia is now, if you owned CRISPR before, you have to allocate some to Intellia. If like you're an institution and you believe in the sector, it's probably what your MD or PM's telling you to do. So that's why I think you've seen a lot of accumulation going on into Intellia, right? It never even broke down under that 130 where it like opened up, like 122 was that low, but it hasn't even gone under 130. So it's very, very strong right now. And I think that the sector is starting to lead with Intellia and Beam. Honestly, Beam weirdly was the leader. It bottomed first and it started running. And now I think that CRISPR is going to be the one that lags, I think, until they start, until their news cycles again, right? They just had sickle cell news with Verve, but until that comes back in the press, I think Intellia is going to be the hot commodity for the whole sector.
What about I saw the news about like the gene editing to block COVID? Is that enough?
We're going to talk about that on the pod, but I'll just read out the little piece I was going to mention. So basically in Israel, this article came out and it says using CRISPR, I don't know why it says Australian researchers have prevented a coronavirus infection from spreading in human cells in the lab. They're now looking at a way to develop the treatment into an oral drug that could halt coronavirus transmission in people and potentially stop other viruses as well. The need for it, an oral medication that could be taken as soon as someone was diagnosed with COVID-19, and that could mark a turning point in the pandemic. And the Australian researchers think their CRISPR treatment could lead to the development of such a drug. So it came out of Israel Press, actually. So that's very interesting, and I think that's why we're so focused on the sector, because of the potential it has long term, just in medicine.
Right, and not only in oral form, CRISPR is also, I don't know if people have been reading up on it, but CRISPR can be delivered through inhalation. So you can have the same way that you inhale, for example, if you have asthma and you're inhaling your albuterol as your medication, we could probably deliver CRISPR in that way for lung disorders like cystic fibrosis, probably for future variants of COVID. So I think we're good. We haven't seen CRISPR on the scene yet for COVID. It's very likely. I don't know if we necessarily need to be chopping up DNA to stop the virus, but it just goes to show how versatile CRISPR is. We can use it for so many different types of indications. And Tony, I just wanted to mention, I know I brought it up this morning. I asked you, like, I've been following these names since 2017, and these names always ran together. Like, I could always use it to my advantage. And now we're finally seeing, like, these names are diverging from each other. Do you want to speak to that a little bit? Like, why are we seeing that now? Why are they not running in sync anymore?
Yeah, I think first of all, it's if you're an ARC-G and you're known as a Cathy name, you are going to move with the rest of the Cathy names. And I think Intelia, because the news was so groundbreaking, and obviously that's what, I'm sure you've been waiting for something like that to happen, Nat, for many years. And so we've already got like that first piece of the breakthrough. And so now that you're starting to see it actually pan out, you're seeing the promises, the beliefs, and the science pan out. You're able to delineate who is the leader. And so, like, I know you're like big fan of graphite as well. So am I. But graphite's not in ARC-G, right? So you haven't seen that really move as much like day to day with the rest of the names in ARC-G. And that is a lot of just market internals, right? Like, those are funds moving, using algos to track. Like, if someone's an ARC tracking fund, right? Like, people have funds that track indices. So they have X number of, positions, all the S&P 500 components, and they're broken down positions. And they have little modifications to them or whatever. And people do the same for ARC. So when Cathy sells, people sell, and that's just the way it rolls. The whole sector moves in tandem. But you're starting to see, like, Intelia can be green and CRISPR can be red. And so that's, like, just good for the sector in general, because it's not healthy for things to just all move together without, like, strong strength for the individual companies. So I'm really looking forward to seeing, I think Intelia is going back to 200. And I think CRISPR could lag and take a little longer. And also, it's larger market cap. So it's less hype and more, it's like, show me what the best next science is. And if you perform well in your trials, you're going to get the valuation, because let's face it, like, there's so much dog shit on the market that's worth so much more. But like, if you consider it and really relate it to how cool another company is that's worth the same valuation, it's a joke. And so, that's the perspective that we're taking on it for like the longer term, and it's happening now. So
Nikola's still worth $6 billion. Just so
Riley, you're fired, dude. I literally said no EVs anymore.
Guys, by the way, if there's any long-term investors listening here, if there are any long-term investors listening here, I'm getting a lot of days with graphite. When therapeutics, it's a clear leader. CRISPR Therapeutics. What's up?
For me, you were cutting off. I don't know if it was just me.
Can you guys hear me? Sorry.
You're good now. Sorry.
Okay, yeah. I'm getting a lot of deja vu. So back in the day when CRISPR Therapeutics was the clear leader, and I'm sure Riley and Tony could tell you, like, CRISPR Therapeutics was absolutely by far the leader that all the other companies were striving to chase. I'm seeing that again now with graphite. Back in the day, it was CRISPR Therapeutics leading, and Intelia was a major laggard, and I could see that, and it was just not justified. And I was adding to my Intelia, like, I was adding like crazy, and I would tell Tony knew probably Beam was the best company for the future to own, but I was just loading up on Intelia because it made absolutely no sense that company was just lagging by far. And I see that again happening. I see it happening again with graphite. And if you're a long-term trader, I know a lot of people like to look at charts and how these companies are moving and how the price, like what the price swings are. Graphite is kind of just holding steady at 25. It's really going under the radar. This thing, I think, is going to absolutely rip. I don't know when. It's probably going to take a few months. It might take until Editas Medicine has good data. I think maybe in September or something like that. But if you're a long-term investor, I think you should be loading up on graphite. This thing is cheap. This thing is dirt cheap. Like, it could double from here and still be worth an equivalent market cap of Editas, who also literally has no approved drug, not that much clinical data out. So I think we're really early. I think people should be adding graphite for sure.
What was the price target that the covers that they got? I think this week was it 35.
It was 35
bucks.
35. So even that's cheap.
34.
Right, that's cheap too.
Nat, if you were an analyst, would you toss a price target, or you don't play that game?
This thing should easily be $50.
5,000
in my opinion. 50. It should be $50. What is it? 25 right now? It should be double. It's very much a CMLF type situation where the market is not appreciating it the way that it should.
That is a Nat pound right there.
I totally agree with the valuation. Like, from a valuation standpoint, if Editas is like $3 billion, it's surprising graphite's not $3 billion.
Yeah, I have a question on that, Nat. I promise this one won't be a hard one. But it is controversial. With Moderna, people have been saying on a lot of podcasts and in the news, we've now hit the $100 billion brick wall. I think if they get an acquisition in genomics, they can sidestep that and be one of the first ones to get past that and be, multiple legs and be higher than 100 billion. But if we don't have the variant repeat and we obviously want this to all go away, their revenues will decrease. So how do they stay relevant? And it's not going to be easy to keep coming up with new drugs. Whereas when you have something like a CMLF or something that's a picks and shovel to genomics, it's a lot more stable. It's a lot more reliable and not so volatile. Whereas when you're going through a graphite, it's only like 2 billion. So it's like that's the time to get in on a drug company or a genomics company before it explodes. Would you agree or disagree?
Right, Don. That's a really good question. And this graphite's not even worth 2 billion right now. I think it's like right around 1.5. And I'm in some other really, really speculative names like Sana, and Sana's 3 billion. So that's how I know that graphite has the potential to double. Like, that's how the market is valuing these companies, whether it's warranted or not. This is how the market is valuing it. I always go by comps. I see what the market is willing to pay. Graphite should be doubled right now, as far as I'm concerned. And on your question about Moderna, I think Moderna is way past 100 billion. I think it's around 128, 130, something like that. I checked yesterday. Moderna definitely needs to acquire somebody. Otherwise, they run the risk of having a blow off top. It definitely shouldn't be worth this much, but the market is valuing it this high. They're in a prime position to acquire a company. Now, people are asking, okay, who should they acquire? Moderna has the ability, well, I'm not sure if everybody's familiar. Moderna has manufacturing capabilities for LNPs. So that's how they deliver the vaccine, through lipid nanoparticles. I think they should acquire a CRISPR company that has expertise or some expertise in lipid nanoparticles. And that's Intellia, but Intellia doesn't have the manufacturing capability. So I think if you mix these two companies, Intellia's lipid nanoparticle program with Moderna's manufacturing capability, I think it's like a match made in heaven if they're willing to go the CRISPR route. And another thing is that Intellia also has base editing capabilities, whether it's not really their base editing IP, but they do have the experience and the know-how to use base editing. And I think Moderna could absolutely appreciate and value if they acquired Intellia.
Hey, Nat, you guys just got me hyped up on genomics. Do you mind if I just quickly touch on a couple of these points real quick? So Nat just mentioned base editing. That's why I got into Beam. When Nat had first mentioned it, Tony pounded it then on the pod. Basically, what that allows you to do is utilize, CRISPR-Cas9 components without having to do that DNA double-stranded break, just for the audience to understand. Think of this like the pencil and eraser, eraser, pretty much erasing the affected gene and being able to kind of have it corrected there. So that's like what base editing does, and that's what David Liu created in his lab in Boston. Whereas graphite, as these guys have been mentioning, which, I've invested in as well. And like Nat said, first of all, looking at comps like peer-to-peer, like that's one of the biggest things. Like, it's a super low valuation, so it's a great entry. But at the same time, what they're doing is a slightly different, also by CRISPR founders, HDR, like directed kind of treatment. So it's like homology directed repair, which is more of like a control F and replace, right? So finding the affected gene and replacing it that way. So these companies have some, it's insane. Like, I think Tony was telling me once, he was watching videos and all this stuff, and there's a lot out there. I mean, human nature is a great starting point. I know Nat put that threw that my way, which was a great entry to just understand this baseline. Just wanted to kind of throw that out there because I know we have a large audience and this space can be a little tricky.
Yeah, right on. I think human nature is like probably, if you're new to the space, human nature is absolutely by far and away one of the best resources you can use. It's an enjoyable movie. The visuals are amazing, and it gives you the foundation you need to understand how CRISPR-Cas9 works. So yeah, I definitely recommend that. And if anybody else has other questions on what to read and what I've been reading, feel free to reach out. I'm pretty active on Twitter. I'm always looking to help out some people.
And that movie is on Netflix, so anyone can watch it. Netflix is a sponsor of ours. So
yeah, we just signed a deal with them today.
Yeah. So anyway, so we've been on here quite some time. We planned a half an hour, and it's now over an hour, which is awesome. But Tony, I don't know. We got it's Wednesday right now, so still got 2 days here coming up. What are you expecting here? Anything to kind of keep an eye out for week ahead?
Yeah, I mean, I think that we got a lot of the shake out of the way Monday, and now we just like bounced back into, we just reversed that move, which pretty much just puts us in a pretty neutral spot. Like you could see some names go higher. Like I think SE and Square have the flows now that they're looking like they're gonna break out, and like 400 is not that far away. But that's just because like I think they're more and more every quarter going to be lumped into the Fang like names and start moving with the general market. But more and more with that extra beta until they get larger and larger. So looking for stuff like that, I could see ARC holding in the 120s now, and that'd be a really good end of the week because last time it hit 131, it just completely just died from there, and it was because it was super far from the VWAP, but there's been a lot of time for the volume and the price action to settle out there. So I could see the market start broadening out because it's been rare that I make money on value and growth simultaneously. So I think we're getting close to it starting to move in tandem, like the general markets overall. You got a lot of inflationary and now again deflationary pressures, whether they're artificial or media driven or whatever. That's the soup that we're at the table looking at in this market. So I could see that more and more broadened out market going forward, and then definitely seeing a lot more tandem movements, which is good. And like you want volatility. I think people were like liking the SPX just going up every day casually. I don't like the most money I ever make trading is when there's volatility. So would love to see some more volatility in the markets, but the good names will perform, right? Like you have bad days, they hold up better. You have great days, they run the most. So it's actually going to be, it might be harder to stomach, but it'll be ending up returning more in the next 6 months. So hoping to see a little bit more volatility, but more, tandem moves in the market.
All right. My bad. I was on mute. I was on a different thing. Awesome. So I guess thanks for everyone for joining here tonight. I know it's been fun. I think we're gonna try to set up like I don't know if anyone watches Sports Center, but like a PTI type of almost an agenda each time, so you guys can know when to jump in and whatnot. And we're also gonna try to record. We're all kicking ourselves for not recording this because we have a lot of listeners throughout the world and people are working, whatever, so life goes on, but we will try to record these in the future. As I mentioned, we're going to be recording our podcast right after this, me and Tony. And so that will be launching this weekend. And then we have Square interview with the co-founder of Square the following week. Also, everyone that listened here tonight to Dom is going to be launching Dom's deep dives on YouTube. So follow our Twitter at Pounding the Table. Pounding the Table. Twitter won't allow us to say the. It's too long. But so follow us there, and we'll be launching that. And then Rahul, give Rahul a follow. He really wants to get to 3K, so follow Rahul as well.
All these guys have done a great job. They all deserve utmost of FinTwit's respect in my mind.
And if you guys follow Riley, just let him know that he is fired. So
Yep.
With that being said, founders, have a great night.
Thanks,
We'll
Thanks for tuning in.
this week on the podcast. See ya.
It was quite a bit. Mm-hmm.